Hello, everyone. I'm so excited to welcome you to another installment of the Forex Morning Mastery with Sheriff Daramola. I'm very sorry for coming in very late this morning. Remember that we had these technical issues with my camera, so I wanted to make sure that we got it sorted out this morning. So I had to do some downloads, update firmware and the likes, but thank goodness that everything is quite fine right now. So I'm so excited to be with you here this morning as we get into the last trading day of the week. Today is a very important day actually. Remember, we are looking forward to a major event from the United States economic docket, which is the NFP data, and of course, being the fact that today is the last trading day of the week, it comes with a lot of psychological peculiarities as participants in the market will want to be rounding off on their trading activities for the week, which of course usually reflects on the chart as price action moving in the opposite direction of the prior leading price action. So during the live session today, we are going to be taking this into consideration while we look out for potential trading opportunities for today. Well, in anticipation of today's trading session, of course, if you are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to how we are going to be managing our positions. So I've done a detailed analysis of the current market conditions using simple and fundamental tools such as trend lines, key levels and chart patterns to gain insight into the current market conditions, and of course use this data to manage our existing position and of course strategically position ourselves ahead of today's trading session. So far this week we've been monitoring three major assets, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we've done pretty well across these assets so far this week, and we are going to be looking at what we did and how we are going to be positioning ourselves for today's trading session. For those of you who are joining us for the first time, you are highly welcome on board, and in fact, I'm very excited to have you around with us this morning. Well, you might be asking what this is all about. Well, as technical traders, we usually gather here on a daily basis as a community and engage in follow-up and reviews of our current positions. Our main focus is on preparing for the London and the New York session utilizing fundamental tools. The session kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time, and I highly recommend that you stay tuned in this session so you don't miss out on any of the valuable ideas we will be discussing here today. So the more time you spend with us, the better you get to comprehend our analytical approach and utilize the information you gather here to enhance your own trading decisions and strategies as well. So once again, I extend a warm welcome to you. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, you know how we do it. We usually focus on high impact event from economic docket that affects the assets on our watch list. And for those of you who are joining us for the first time, you might be asking what is the necessity of checking the economic calendar. Well, as technical traders, we do know that the fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So right back into the economic calendar, as we all know, since based on the asset we're monitoring so far this week, we will be focusing on high impact event from the economic dockets that affects the assets on our watch list, and this includes the United States and the United Kingdom. So I would like to take all the other economic dockets out and leave the United States and the United Kingdom. Then we'll go on to the impact, the strength of the impact, which will basically leave at the high one. And then let's apply the filter and let's see what we have here. So for today, Friday, November 3rd, we have 4 high impact events, all of which are coming in from the United States economic docket. Now, the first one we are going to be looking forward to today is the average hourly earnings, which is coming up in about 3 to 4 hours from now. And for those of us who don't know what this, well, this is a data released by the US Bureau of Labor Statistics, and in fact, it is a significant indicator of labor cost inflation and of the tightness of the labor market. Now, the Federal Reserve Board pays close attention to this kind of data as it gives a tone into how they will be setting the interest rate. So a high reading here is considered as positive for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of September, it came in at 0.2%. compared to what consensus are projecting for the month of October, which is a little bit higher than the previous month, as they are expecting an expansion of 0.3%, which let's see how this is going to be like in terms of the actual data. Then fast forward and simultaneously, we will be looking forward to the non-farm payroll, which of course, you know, this is what majority in the market are looking forward to, as it has a tendency of inciting volatility in the market. Well, this data also is released by the US Bureau of Labor Statistics, and it gives us the number of jobs created during the previous month in all non-agricultural businesses. And of course, a higher reading is considered as positive, while a low reading is considered as negative. Now, if you look at the previous data, which usually is subject to some changes during the time the publication happens, it comes in at 336,000, and we have economists projecting 180,000 expansion for the month of October, which is a little bit lower than the previous data. So we are looking forward to some decline in the expansion in that sector. So let's see what the actual data is going to be like. Then finally for today, we are looking forward to the ISM Services PMI, another very impactful event, which is considered it's considered to show business condition in the U.S. non-manufacturing sector. Now, the data here, anything above 50 is considered as positive for the US dollar, and anything lower than 50, of course, is considered as negative. Now, from the previous data here for the month of September, it came in at 53.6, and economists are projecting 53 for the month of October, which is a little bit lower than the previous data for the month of September. So all we are going to be doing today is to exercise patience and wait to see what the actual data will be, as it will be giving us an impetus into the potential trajectory of price action. And of course, we do know that the anticipation of these events alone has a tendency of influencing the market sentiment, which in the long run will reflect on the chart as price action. So with that being said, and talking about price action, let's dive right into the business. And as usual, the first asset on our watch list for today is usually going to be the USOILSPOT. I don't know why it usually takes quite a long time before my USOILSPOT chart loads up. So let's give some time. While that loads up, I see a couple of comments here from the comment section. Princess Aboluwakwe, good morning to you. Fred, good morning to you. And I'm very excited to have you around with us. Happy Friday to you guys. So my chart is still finding it difficult to load. So what I will do here instead is to try to open another page here. So let me see if this is going to work out. So hold on a second, please. So let's see if this will open up faster. All right, so all right, here we go. So the next asset on our watch list for today is going to be the USOILSPOT. So let me just expand this a little bit so that we can see things more clearly at this juncture. All right, so for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to regards to how we are going to be managing our positions for today's trading session. And of course, oil prices have continued to rise for the second day in a row, giving us about 2 buy positions running at those points in time. And this, I think, is driven by an increased appetite for risk in the market. And this is not just a sudden appetite for risk that just come up. It's as a result of the belief that the FOMC has reached the peak of money tightening policy, and the Fed chairman actually hinted that there is likely going to be some rate cut begin from the second quarter of last year. And this for us is a sign that we might likely be seeing the US dollar less attractive in the nearest future. Additionally, escalating tensions in the Middle East is also boosting oil prices, as everyone is expecting that we could be seeing some disruption in oil supply for crude oil across the globe. And because of these tendencies, we are beginning to see some bullish traction resume in this particular market. So let's take a quick technical perspective into what is really going on in this market since the beginning of the week, for the sake of those who are joining us for the first time, so you can really have an idea into what guided our decision making throughout the course of this week. Now, so at the beginning of this week, we were able to identify a range where price was initially confined within the $84.60 level and the $83.85 area, giving us an insight into the level of indecision that started this week in this particular market. And of course, you know how we use our flat channels whenever we identify them on the chart. We do want to exercise patience and wait for signals in the form of either a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And of course, at no point in time did we see price climb closer to the resistance line, as instead we begin to see selling pressure trying to break through that support line most of the first 6-7 hours of the beginning of this week. And finally, we saw the breakdown of that support line. We saw a retest of structure, and since then we have been selling the USOILSPOT. So we sold all the way into that $80.85 area, where we begin to notice buy traction resume around this area. Now, on Tuesday, we anticipated the breakout of that descending trend line to welcome buying opportunities, and in fact, we saw price move about 100 pips in our favor before sellers came in, and on that one we were able to scoop in some modest size of profit as we moved our stop losses accordingly to secure the buy position before the sell momentum came in to take us out of that position. Now, during our live session yesterday, which is Thursday, we had a beautiful setup in anticipation of the London and the New York session. And one of the things we saw on this chart was the inability of sellers to break through the $80 barrier. As you will see here that we saw this sharp rejection around the zone yesterday morning. And one of the things we said here is that if we are really going to be selling, that we would want to see price action slice through the $80 area to capitalize on a downtrend move. And of course, we saw that never happened. We saw continued buy pressure as we saw another sharp rejection of that $80 area, giving us signs that sellers are finding it difficult to settle below that area. And as a result of this, we anticipated the breakout of the descending trend line. Remember, this descending trend line has been our yardstick since the beginning of the week, and we did agree that the only condition that will make us continue selling is for price to stay below that descending trend line. And if at any point in time we witness a breakout and retest of that structure, we do want to be getting ready to buy. So we had a position to trigger at the $80.85 level, and since yesterday we have been buying the USOILSPOT. Now remember that we also had some other levels that we were able to identify here, where we said a breakout of that structure will definitely be welcoming more buy position. And as it is right now, the third position happens to have been triggered right now. So at this point in time, we have about 3 positions running in profit at this juncture. So let's say the first buy position is running with over 200 pips right now, while the second buy position is running with over 85 pips in profit, while the third position just got triggered. I think we still have about 2 pips or so running at this point in time. And for those of us who took advantage of these opportunities, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we usually do whenever we identify this, whenever price action moves significantly in our favor, we do want to be moving our stop losses and secure the current buy position. And from what it's looking like here on this chart, I will be suggesting that anywhere around that $82 area seems most appropriate. Let's lock in some profit here. Let's put our stop losses around this area while we continue to monitor price action from this point. And remember that while we are putting our stop losses, we do want to give enough breathing space for price action to move around in anticipation of a potential uptrend continuation. So with a well-secured position at this juncture, what is going to be our next line of action for today? Do we have any tendencies of sellers coming in here, or are there chances that buyers will continue to dictate the pace going into the weekend? Now, let's take a quick look at what is going on here. Hold on a second, please. I would like to take a little short break to sort out some issues here, and I will be back in a moment. Thank you very, very much. Sorry everyone for the break in transmission. I had to sort out some very, very important and personal issues here so that things will not get out of hand. So thank you very much for staying around. So as we were saying, we were talking about our plans for today's trading session and how we intend to capitalize on the next course of action for today. Now, the fact here is that price action is currently trading above that descending trend line, which of course has been broken, hereby negating all selling attempts around this area, or all selling potential. Let me use that word. As you will see, we have the descending trend line here. It has been broken to the upside during the New York session yesterday. Then secondly, we noticed buy pressure around that area between the $80 area and the $80.85 zone, giving us further confirmations that sellers are finding it difficult to break through this area. So as a result of this observation, everything at this point in time is hereby screaming bullish for us to move to the upside. Now, there is a barrier that we need to take into consideration while we try to project our decisions for today, and that is the $82.80 zone. Now, if we look at this level since the beginning of this week, you will see how it has played a major role in negating all attempt by the buyers to break out of this structure. Now, to give a clearer picture of what I'm talking about, look at what happened here on Monday. We saw selling pressure around this area. We saw continued selling pressure around this area. And in fact, we had a little bit of breakout here on Wednesday, but it failed. We saw engulfing bearish candle pushing price back to the downside. Now, price action is back into that zone, and in fact, in the last couple of hours, we begin to notice how buyers are struggling to gain momentum and break out of this price level. So you would agree with me that we are at a crucial juncture in the market right now, where depending on how price action reacts to the structure will determine what our next line of action will be. Now, in that regard, we will not ignore the potentials that sellers could come in. Of course, this area has been a selling territory since the beginning of the week, and the possibilities of sellers coming into here still remains very valid. And if we now consider the breakout of this descending trend line, which happened yesterday, from a technical standpoint, we do expect that when price breaks out of a trend line like this, we expect that some point in time price may come back to retest the trend line to incite an uptrend continuation. So this is a possibility here that we also want to take into consideration. So if selling pressure persists below the $82.80 area, where price action transitions into a reversal pattern, then if price goes on to break down the $82 area, taking us out of this buy position, we might likely be seeing a counter trend move back into the structure, where the appearance of buy pressure will incite an uptrend move. So if you are a counter trend trader or a scalper and you feel comfortable taking counter trend opportunities, you might as well want to look out for selling opportunities below the $82 area. That is a breakdown retest of that structure all the way to the downside, which of course will dovetail to, let's say, a minimum of 120 pips to a maximum of 200 pips thereabout. However, personally, if this happens, I would like to see continued selling pressure below the $82 area to confirm that we are going to the downside. And if we join that move, we want to see how the market will react to the zone one more time to decide what our next line of action will be. Are we going to be adding more sell position? If we are, then we want to see price break down the $80 level to the downside. And if we are going to be buying, we want to see reemergence of buy pressure around that area. However, which is more likely to happen today, considering the last trading day of the week, if price breaks out the $82.80 level, then we do want to be part of an uptrend continuation. Now, there are two ways to which we can capitalize on this opportunity depending on where you at based on this journey since the beginning of the week. Now, for those of us who have been part of the profitable journey we had since the beginning of the week on the USOILSPOT, remember we sold at the beginning of the week, and yesterday we began to gain some bullish traction on this market. So if you are profitable, then you can afford to leverage on the profit you've made so far this week to test waters above the $82.80 level. So placing a buy stop order above the $82.80 levels makes quite a lot of sense. And in fact, if it doesn't work out, we know that we are only risking some of the profit we had made so far this week. However, if you are new with us today and this is your first trade you are going to be taking on the US All Sport, that is, you don't have any profit to bank on, well, I will encourage you to exercise patience and wait for confirmations which would reflect on the chart as price retesting the structure that was broken to incite an uptrend continuation. Now, if price continues to climb to the high side, remember that we have multiple levels that we can use to capitalize on this uptrend move. We have levels like the $83.85, the $84.60 area, and of course the $85.50 level, which of course I doubt price will get to this level today, but if it does, we do want to be part of this uptrend move. So these are my views on the US All Spot for today. So let's see how the market will play out. The $82.80 level is a very crucial juncture in this market, and depending on how market participants react to the structure today will determine if we are going to be seeing a counter trend opportunity pushing price back into that descending trend line and the $80.50 zone, or a breakout of the $82.80 area will welcome buying opportunities. So let's see how the market will play out. And of course, trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So with all I've said so far, if you do have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your charts. All right. So in the absence of no questions, I do want to assume that we are all on the same page here. And in that regard, let's move on to the next asset on our watch list. sorry. Oh, I'm very, very sorry. I just saw this in the comment section now that there is no audio. All right, I'm sorry. Thank you very much for those feedbacks. I really, really do appreciate that. So I will just have to take it all over again, what I have said so far. So like I was saying, the GBPUSD had gained some quite of traction in the last 24 to 48 hours in this market. And considering the fundamental aspect of this market where we witnessed, especially following the Bank of England's decision to keep interest rate yesterday, which was of course expected. It wasn't a surprise to everyone, as everyone knew that the Bank of England was going to maintain their interest rate. And of course, supported with the weaker US dollar, we've seen some positive traction, giving us about 4 positions running on the pound sterling for today. Now, the Bank of England, during the press conference yesterday, made mention of something very, very significant that we do want to hold at the back of our hands. And one of the things he said, that he hinted the possibility of additional rate hike in the nearest future. And he downplayed, when he was asked the question of a potential rate cut, he downplayed the potential rate cut anytime soon. And this for me is a red flag. And of course, if we are looking forward to additional rate hike before the end of the year, maybe this could be served as an attractive window for investors to place their bets on the pound sterling because of the yield in return when it comes to rate hikes. Now, this for me, I see is a reason why we have seen some positive traction in favor of the pound sterling in the last 24 hours. Now, coupled with that is the US Treasury yield, which has been going downside in the last 24-48 hours. For those of you who are familiar with the US Treasury yield, the rate has been dropping. Currently, it's about 4.7% as against the 5.25 it was last week, I guess. I'm not sure if I'm right, 5.25 or 5.7, thereabout. But as of yesterday, it was at 4.7%. So it's tanking at this point in time. And because of this, it has affected the US dollar a little bit, as the dollar is losing traction amongst its major peers in the market. Now, if we take it a step further to look at the technical perspective of this current market condition, you remember that at the beginning of this week, we identified an ascending trend line, which of course we have been using to guide our decisions since the beginning of this week. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we do want to be looking out for patterns and structures that supports the idea of buying that asset. And this has been our guide since the beginning of the week, giving us the confidence of adding more buy positions to our existing trade. So currently we have over 150 pips running in profit from 4 buy positions. Okay, so we have this. We had the first entry at the 1.21330 level. We had the second entry at the breakout of the 1.216. We had the third entry around the 1.21750. And of course, we had the fourth entry at the breakout of the 1.21990 area, which is currently running in a loss right now. So what we will be doing right now is to ensure that we secure the current buy positions by moving all our stop losses accordingly. And in fact, based on this current market condition, I will suggest that we move all stop losses to that area around the 1.21750, and let's see how the market will play out from here. And while we are moving our stop losses, I always emphasize this: ensure that you give enough breathing room for price action to move around, as we don't want to get caught out in a situation where the uptrend position is still very, very intact. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Now, if we zoom into this current structure and look at what has been going on here, first of all, the market is trading above our ascending trend line, which makes us feel very comfortable in a buy position. So even we might still see some bearish momentum bring price into this ascending trend line to incite an uptrend move, still a very good possibility in this market. Now, secondly, another thing is going on in this market since the New York session yesterday, and that is the inability of buyers to break out of the 1.22200 zone. As you will see, the last time price came into the structure was a couple of hours into the New York session yesterday, and since that moment, price action had found lower highs in this market, giving us potentials that sellers may likely want to be taking over this market. And this could be a reflection of profit-taking activities, as majority are still not sure if this bullish momentum will continue to the upside. And we might likely see majority in the market closing in some of their position, which will definitely reflect on the chart as price retracing back into the ascending trend line or even break down the ascending trend line. So if I still maintain the bullish bias here, but if you were considering adding more buy position at this juncture, I will suggest that we need price action to take out all the sell positions along the zone to give us a confidence of adding more buy positions to our existing trade. So as a result of this, I personally have a buy stop order sitting above the 1.22200 zone, where I'm looking forward to more opportunities to capitalize on the uptrend scenario. Now, there are two ways to which you can capitalize on this. I will keep on emphasizing on this one because of those of us who are joining for the first time. Now, for those of us who have been part of this profitable journey since the beginning of the week, all you want to be doing now is to place your buy stop order above the 1.2200 area, as we can afford to leverage on some of the profit we had made so far this week. And even if it doesn't work out, we know that we are only eating into the profit we made and not our original capital from our portfolio. However, if you are new with us and this is your first time taking a position with us on the GBPUSD, then it is important that you exercise patience and wait for confirmations to happen before you jump into the position. And confirmations will definitely come in the form of price action coming back to retest structure, where the appearance of buy pressure or signs that sellers are finding it difficult to drop further to the downside give us an opportunity to join the uptrend move. And of course, I will be with you in the comment section if this happens to give you updates on how we are going to be capitalizing on that move. So on the GBPUSD, I still hold on to a bullish bias here and looking out for more buying opportunities above the 1.22200 zone, and the only condition that will make me want to sell the GBPUSD is for price action to slice through this ascending trend line, breaking it to the downside. And remember that if price breaks down the ascending trend line, we are not jumping right away because it could turn out to be a false breakdown. So we'll need some confirmations to happen. So as soon as the breakdown of the ascending trend line happens, which I think will line up with this level at the 1.21600 area, which interestingly shares a confluence with that ascending trend line. So if a breakdown of both the 1.216 and the ascending trend line happens, then we exercise patience and wait for probably a sharp rejection of that structure to incite a downtrend move. So this is the only condition that will make me want to consider selling: a negation of that ascending trend line, a breakdown of the 1.21600 area before we can join this. Other than this, if this does not happen, I still hold on to a bullish bias. And one thing I'd also like to state here is that if price drops back into any of this ascending trend line and we begin to see the emergence of buy pressure, that is, sellers are finding it difficult to break down the ascending trend lines, and price transition into something like a reversal pattern, let's mark out our neckline. A breakout of the neckline will welcome another wave of bullish momentum. So this is how we are going to be managing our positions on the GBP USD for today. So let's take this into consideration. I hold on to a bullish bias unless price breaks down both the ascending trend lines and the 1.216. So if you have any questions as regards to my explanation so far, feel free to let me know in the comment section. And as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also use that time to mark out this level on your charts. All right, so I see a comment here in the comment section. Files Wihaki, I hope I pronounce your name correctly. Please, if I don't, please pardon me, please. And you are new here, thank you very much. You're welcome on board. Glad to have you around with us. And you want to know how to draw the levels on the chart. Well, let me quickly say this. The Forex Morning Mastery is a platform where we come to do follow-up details on the videos on my preparation for the new week. So usually I do share a top-down analysis of the assets we are going to be looking at for the new week during the course of the weekend. So I would encourage you to subscribe to the channel so that whenever I share these videos, you get to see them. And in fact, I go the extra mile of explaining how we identify our key levels, trend lines, and patterns we use to guide our trading decisions for every new week. So if you today is Friday, so I usually start sharing videos late night Fridays, Saturdays, and Sundays. So if you are still with us in this platform, you will definitely get videos in preparation for next week. So I do encourage you to watch those videos and you get to understand how we were able to identify these levels we use on this chart. In fact, we have links to the previous videos for last weekend in the comment section of this current video you are watching, so you can check them out after the live session to have a background knowledge of how we got to this current point we are. And once again, you are welcome. File is on board with us, and I look forward to seeing more of you in our subsequent editions. So thank you very much on that one. So in the absence of no questions, I do want to assume that we are all on the same page here. And in that regard, let's move on to the final asset on our watch list for this week. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, we have an interesting buy position running at this point in time, though it may not seem very significant at this point, considering what we usually capture on a weekly basis on the XAUUSD. Well, in the last 96 hours, the current market condition has been very, very consolidating, hereby emphasizing the level of indecision going on in this market. However, in the last 36 hours, we begin to notice the reemergence of buyers coming into this market. And in fact, in the last 2 days, we've been maintaining an intraday gains as we approach, as everyone gets prepared for the NFP data coming up much more later today. Now, the ongoing belief in the market generally is that the Federal Reserve is edging closer to concluding its policy tightening campaign. Remember, in the last 2-3 years, we have been witnessing consistent rate hikes, which has brought the interest rate baseline to 5.25 for the U.S. economic docket recently. And in the last couple of rate decisions, we saw that the interest rate would remain unchanged. And some of the comments that the Fed chairman said during the interest rate decision was the potential of rate cuts in the month of June of next year, which is a sign that the U.S. economy is gradually rounding off on the tightening policies, and this is likely going to incite some rate cuts in the nearest future. And this has some way or the other affected the US dollar's traction. So in that regard, I'm of the opinion that the US dollar might gradually start losing momentum in the nearest future. And if this is going to be happening, then we might start seeing some transfer of capital from major currency pairs into safe haven assets such as the gold. Now, besides all this, we have this geopolitical unrest going on in the Middle East and concerns surrounding a slowdown in the China's economy. Remember, China released its economic features during the last couple of weeks, and they are not promising at all, as data were coming in below expectations, giving us signs of a slowdown in the Chinese economy. So all these are giving support for the gold. However, the indecision going on right now is as a result of majority in the market waiting for that final straw, which is the NFP data coming up today, which everyone is looking forward to see what the actual data will be like. Of course, from consensus right now, majority are thinking that there is going to be a contraction in the labor sector, which I think is coming in at 180,000 compared to 300,000 plus for the previous month. Now, let's go into the chart from a technical standpoint, and let's quickly run through how the week started for us on the XAUUSD and what led to the decisions we have been making so far this week. Now, at the beginning of this week, we were able to identify a range where price was confined within the $2,006.50 level and the 1,955 area to give us an insight into the level of indecision at that point in time. But despite the indecisive phase here, we clearly noticed that price action was finding lower highs within this range that we saw here, hereby giving us this descending trend line we spotted at the beginning of the week. And one of the things we agreed at the beginning of the week is that we will be using this trend line as a yardstick to guide our decisions. Now, for those of you who were part of our live session on Monday, remember we acknowledged this impulsive move that started on Friday of last week. And this bearish momentum, we saw it as a retracement phase where we identified a golden zone area where we were looking forward to how price action will react to the zone to give us an opportunity to join. And one thing we notice here is the continued rejection of the $1,990.60 level, a level where we saw how sellers found it difficult to break through for the first couple of days of this week. We saw the first one here on Monday. Price sellers were unable to break through that structure. We saw the same thing also happen here on Tuesday, and as a result of this, we anticipated the breakout of that descending trend line to capitalize on a bullish move. And in fact, we did join a bullish momentum here. Price moved about 100 pips before sellers came in to take us out of that position. And as soon as price broke down that ascending trend line, remember we had an ascending trend line at the beginning of the week right here. And as soon as we saw the breakdown of the ascending trend line, we got ready for another opportunity to sell, where we used the $1,990.60 level, a level which was holding selling pressure for a while during the first half of the week to capitalize on the bearish move. And in that moment, we had about 150 pips move before this buy pressure began. Now, during our live session yesterday, we emphasized the importance of a robust demand zone, which was identified around our key level at the 1,980 area. Now, if you see what was going on here since last week Wednesday, we saw how it became difficult for sellers to break through the structure. And this was a red flag for us, of course, that buyers may likely be dictating the pace through the second half of this week. And the inability of sellers to break through this structure is a beautiful signal that we should get ready to buy. And as a result of that, we had buy positions above the 1,980, and we also added one more buy position at the breakout of the resistance line here at the $1,986.50 level. So it was more of using this range here at during our live session yesterday to guide our decisions. Remember, we had this range identified during our live session yesterday, and we agreed that the only condition that will make us want to sell the XAUUSD is for price to break through that demand zone, retest of structure to give us an opportunity to sell, which of course never happened, and the continued buy pressure above the descending trend line and the 1980 area made us feel comfortable in our buy positions. So for those of us who took advantage of these buy opportunities, well done to you for being on standby to capitalize on this move. So at this point in time, I will just advise us all to move our stop loss to anywhere around the $1,983.50 level and the 1,980 area. Let's give enough breathing space for price action to breathe because of the potential volatility that is likely going to be coming in today in anticipation of the NFP data. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Well, as long as price action still remains above this descending trend line, I'm still of the opinion that buyers still have a say, and the fact that the US dollar is experiencing weakness based on a couple of factors. One, the potential rate cuts in the nearest future. Secondly, the US Treasury yield, which is dropping in the last 24-48 hours. And thirdly, the escalating tensions in the Middle East, all of which are supporting the mass input into the XAUUSD. So as a result of this, I'll still hold on to a bullish bias. Now, as we get prepared for today's trading session, where are the areas and levels we shall be looking out for more opportunities? Well, let's look at this $1,990.60 area, or should we adjust it to, hold on a second, let's see how this area is. So I think the $1,990.60 area still makes quite a lot of sense based on this current structure. As you will see here, that since Tuesday's trading session, we have seen how sellers have been dictating the pace as soon as price got into that area. So every attempt by the buyers to break through this structure has been met with strong resistance from the sellers at every point in time. Now, as a result of this observation, we want to see price break out of the zone. In fact, break it out and stay above the zone for us to feel confident of adding more buy position. So for those of us who are part of my Telegram and TradingView platform, I told us all that we are looking out for buying opportunities above the 1,995 area. But based on what we are seeing here, a breakout of the $1,990.60 level could be another opportunity to join an uptrend move. And if price continues to climb up, breakout of the 1,995, breakout of the $2,000 area are all levels we shall be looking out for to guide more buying positions in this particular market. Now, there are two ways to which we can capitalize on these trading opportunities. I do want to re-emphasize this as many times as possible. Now, for those of us who are profitable on this asset this week, that is, you've scooped in a significant amount of profit on this asset, you can afford to place your buy stop order at these entry levels we've identified here. However, if you are new with us, you would want to wait for confirmations to happen in the form of a retest of structure to join that uptrend move. Now, the reason why I am saying this is simply because for those of us who are profitable, we can afford to risk some of the profit we have made so far this week to test waters around that area. And in fact, if the breakout happens and price fails to continue and it fails, then definitely we know that we are just risking some of the profit we had made so far this week. And for those of us who are joining for the first time, you have no buffer that you can bank on. So it's necessary you wait for confirmations to happen before you jump into any position. And it's on this note, I would like to call it a day here, but I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as regards to the current setup or probably any of the assets we talked about today. And trust me, I am here and willing to be of help in that regard. And if you have found this content helpful and useful in making your independent trading decision, I will really appreciate your support by giving the video a thumbs up. your likes are valuable to me, and in fact it is the cheapest way you can support and encourage this project. Thank you very much as you do so, and in fact your likes also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. So once again, thank you very much for supporting the project. For those who had liked so far, thank you very much. For those who are yet to like, please do. This is the cheapest way you can support this project, and thank you very much as you do so. On that note, let's wait for about 10 to 15 seconds and see if there are any questions before we round up for today's trading session. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So I see your comment here, Hiker's Diary. Well done to you. Good morning. You're asking here that what is the correct way that we can enter for a trade when there is a upcoming economic news release? Very good question there. First of all, I would like to state here that the economic release is not really what we are looking forward to, but the way the market participants in the markets are going to anticipate that event prior to the event, and of course their immediate reaction to that event. Now, this is where price action comes in. So whatever way participants anticipate the event will of course reflect on the chart as price action. And prior to every event, I've come to realize that we usually get signals prior to the event. As before the event happens, those who are close to the department that will be releasing the event already know what the data is going to be like. And because of this knowledge, they also have positions in the market too as well. In fact, big positions which can be reflected on the chart as chart patterns and price action. Now, what we do here as technical traders is to try to understand what the current market structure is saying by looking out for patterns and structures that will support the idea of either buying or selling. So that is simply what we've been doing today. So you don't necessarily need to ask that question in the first place, that okay, what do we want to do? It's like you are separating the event from the actual analysis we are making here. So everything goes hand in hand. So whatever we're doing here right now is actually a preparation for whatever is going to be happening today. So what we are doing here is to try to understand the psychology of price movement and how participants are getting ready for that event. So if we have double bottom, for instance, in this case scenario, we definitely want to be looking forward to the breakout retest of the neckline area to give us an opportunity to buy. However, if price breaks down the support line, then we definitely want to be looking out for selling opportunity. So irrespective of what is going to be happening during the event, what you want to be doing is to focus on the chart. Let's see what the structure is saying. Do we have levels we can use to guide our decisions? Do we have patterns we want to be using? Do we have structures we can use? And that is, of course, what we've been doing here. So don't separate them. It's all one in one, and we have already done that already. Just mark out these levels on your chart and let's wait for structures to mature. Then we jump into the position as soon as it does. So I hope I made myself very clear there. But if there's something you really don't understand in what I just said, please let me know and I will try to expatiate on that one. All right, on that one. So I just dropped the link to the XAUUSD live window right in the comment section. you want to click on that link, click on the notify me button so you can get notified as soon as we come on live for the XAUUSD live window. So for those of you who are joining us for the first time who don't know what this is all about, well, the XAUUSD live window is a platform that was born out of popular demand from members of this community. So it's an avenue where we can come together to monitor real-time price action of the XAUUSD, especially during the New York session. So it usually kickstarts 5 to 10 minutes into the New York session, so we can all be part of that session where we see how we anticipate next entries, how we secure our position, and of course how we also anticipate potential reversals if there is any during the New York session. So I encourage us all to be part of that session, and let's keep the session alive by commenting and engaging in the comment section below. So thank you very much, guys. Okay, Daria, I saw your comment. Okay, I'm very glad you found that useful. So on this note, I would like to round off for today's trading session. It has been a wonderful moment this week so far, as we were able to at least take some significant amount of profit on the asset we've been monitoring since the beginning of this week, which includes the USOILSPOT, the GBPUSD, and the XAUUSD. And so I do encourage us all to exercise patience and allow our structures to mature before we jump into any positions for today. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, I look forward to seeing more of you same time on Monday morning as we take another fresh new look in the financial market, and of course prepare for the new week too as well. I will start dropping my preparation for next week during the later part of today. So if you have not subscribed yet, please do. By subscribing, you get notified as soon as I drop new ideas and commentaries on this platform. Thank you very much for the support so far. Thank you for the likes. I really do appreciate, and I look forward to seeing you all in the comment section of both my TradingView, Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful weekend. Do have a wonderful evening, everyone. Bye-bye.